Before you even think about entering a trade using the 714 method, there are 3 crucial steps you need to take to properly set up your chart. And trust me, these steps are non-negotiable. If you skip them or get them wrong, your entire strategy could fall apart, and we don't want that. So let's break it down step by step. Step 1. Scale down to the 5-minute time frame. This strategy is built specifically for scalping, and that means quick trades, short holding times, and being in and out of the market with precision. The 5-minute chart gives you just the right amount of detail to spot quick price moves, while still showing enough structure to make smart decisions. So go ahead and switch your chart to the M5 timeframe. This is where all the action happens. It's where you'll identify setups, time your entries, and manage your trades. Anything higher than this, and you're not scalping, you're guessing. Step 2. Adjust your time zone to UTC+2. This step is absolutely critical, and most traders overlook it. Don't be that guy. The 714 method is time-based, meaning your chart must reflect the correct time zone to line up with the key market reaction points. If your chart is showing the wrong time, you'll miss the setups completely or worse, take trades at the wrong time and wonder why it didn't work. If you're based in South Africa, good news. This is already your local time, so you're good to go. But if you're in another country, whether it's the UK, US, Asia, you'll need to convert your local time to match UTC+2. Remember, the market doesn't care where you're trading from. But if you want to trade with the market and not against it, this time zone alignment is essential. Step 3. Draw a vertical line at exactly 1 p.m. This is where we start getting tactical. Draw a vertical line at exactly 1300 hours, or 1 p.m. sharp, on your chart, and make sure it's visible every single day. Why 1 p.m.? This is one of the key reaction points in the 714 method. It's a time when the market often shifts, grabs liquidity, or begins to make its real move for the session. It's like the calm before the storm, and this line will help you visually anticipate that moment. This line becomes your anchor, your checkpoint. Every time you open your charts, you should be asking, what's price doing before 1 p.m.? What happens shortly after? Are we seeing liquidity grabs, fake outs, or structure shifts? The more you train your eye to watch price behavior around this time, the better you'll get at spotting 714 method setups like a pro. So far, we've already covered the crucial chart setup steps. Now the fun begins. We're officially ready to start trading the 714 method. But hold on. Before we dive straight into spotting entries and taking trades, there are 2 golden rules you need to understand. These are the core principles of the entire strategy. Without them, the method just doesn't work. Let's break them down. Rule number 1. Start observing price from 1 p.m. Once your chart is set and your vertical line is drawn at 1 p.m., that's your observation window. From this point forward, we begin watching how price behaves. We don't force anything, we observe. We let the market show us its hand. Rule number 2. Trade against the 1 p.m. trend. This is what makes the 714 method unique. It goes against traditional thinking. Here's how it works. If price is bullish from 1 p.m., meaning it's pushing up, forming higher highs, or showing momentum, we're actually going to be looking for selling opportunities. If price is bearish from 1 p.m., moving lower, forming lower lows, then we're going to be looking for buying opportunities. Now I know what you're thinking. Wait, why would we sell in a bullish market and buy in a bearish one? Simple. The 714 method is built around liquidity manipulation. Market makers often drive price in one direction to trap retail traders, only to reverse it and go the other way. That's where we strike. We wait for the trap, then we take the real move. So again, from 1 p.m., we're not reacting emotionally. We're watching for signs of manipulation, and once we spot the fake move, we take the opposite direction. All right, now that we understand the rules of the 714 method, let's bring it to life with a real chart example. Here, we're looking at gold on the 5-minute time frame. As you can see, we've already done our homework. Our chart is clean, the time zone is set to UTC+2, and our vertical line is drawn at exactly 1 p.m. Step 1. Observe price from 1 p.m. So now we begin observing how price moves after 1 p.m. And right away, it's clear, price is bullish. We're seeing strong upward momentum and clean higher highs forming. That's our first clue. And remember the rule. When price is bullish after 1 p.m., we're not chasing it. We're not getting FOMO and buying at the top. Instead, we're doing the opposite. We're looking for a chance to sell. But here's the key part. We don't just sell anywhere. We wait for a high probability level to line up. Step 2, look left for resistance. Since price is pushing up, the logical thing to do is look left on the chart. We're searching for a resistance level, a spot where price previously struggled to break through. And boom, we've got it. Just above the current price action, we can see a level where price rejected multiple times in the past. Several wicks, no clean breakout. That's a sign of strong resistance. This becomes our area of interest. Step 3, watch price react at resistance. Now back to current price. As price approaches that resistance level, what happens? It taps into it, and then rejection, clean, sharp, and confident. That's our confirmation. The market made a move up to trap buyers, tapped into a key resistance zone, and now it's showing us the real move down. And just like that, price drops nicely to the downside, giving us a beautiful sell opportunity. That's a textbook 714 method trade, and we're calling that the first win of the day. Let's jump straight into the next chart example. And this time, we're flipping the play. Here, we can see that from 1 p.m., price is clearly moving in a bearish structure. We've got lower highs, lower lows, and solid momentum pushing price down. No confusion here. The market is screaming downtrend. But hold up. You already know what the 714 method teaches us. When price is bearish after 1 p.m., we don't follow the crowd and sell. Instead, we go against the wave. We start looking for buying opportunities. So from our vertical line at 1 p.m., we observe price pushing down. Clean structure, solid movement, perfect setup for a potential reversal. Now that we're looking to buy, we need to find a support level. So what do? Yep, we look left. We're scanning for a key level where price previously bounced off. And just as expected, boom, we find a clear support zone with multiple rejections in the past. Price respected that level before, and we're banking on the idea that it might do it again. Fast forward. Price continues its bearish move and taps into our support zone. And just like clockwork, we get a rejection. A strong wick followed by bullish momentum kicking in. That's our green light. The market tried to trap sellers by driving price down, hit the key level, and then turned around, giving us a sweep buy opportunity. And yes, it played out beautifully. Price pushed up from that support level, marking yet another win for the 714 method. Take the trade with confidence, knowing the method is rooted in market behavior, not guesswork. This is what makes the 714 method so powerful. It's not about being right all the time. It's about understanding the trap and taking advantage of the reversal.